We have got a studio guest with us. That's Gemma Dale from nabtrade. Gemma, welcome back to the program.
Thank you.
Some interesting trades this week. Usually we see the banks among the most traded, but that's not what we've seen this week. Who has taken their place?
So banks are still really popular. Investors love them and they really love to buy on weakness, but we've seen these other shares come through really strongly this week. So Fortescue has made the top quite a number of times this week, and it's come through, interestingly enough, not as a strong buy. So it's about 50% of the volume is going through as sells, so you're seeing real ambivalence about whether or not there's opportunity there. So investors see it, they like it. If they see the price jump, they'll get out again. So we're seeing this really active trading in Fortescue, and ironically BHP and Rio and the others where they might be also looking for some opportunity to take advantage of real rally in the iron ore price, and also so obviously pressure coming out of Brazil on actual supply. They're not buying those anywhere near as strongly. So when I look down the list, they're quite a long way down. Fortescue's right at the top and they're trading it really actively. The other one is Macquarie. They're quite different companies. They have a very different approach to how they do business.
I couldn't see a link when you mentioned those.
There was no link whatsoever. They're just the two things that people are interested in this week. So Macquarie obviously looking for growth. Most of our investors, that's where they go. They like financials in general, but Macquarie has a very different profile to the rest of the banks that they generally hold. Macquarie is the 10th most held stock on nabtrade, so it's always in there, but it's very rarely traded at these kinds of volumes. And Fortescue's been sort of marching up, so for people to be selling it, they need to hold it in the first place. They've been buying and selling this week quite aggressively, also in very large trade sizes. So the average trade size for Fortescue at the moment is $78,000. That's not small. You know, the stuff that people are taking a little punt on is down at the $10,000 mark and maybe even smaller. When they're playing around with sort of $80,000 trade sizes on average, then you know that they're really quite committed to whatever view they're taking on it.
With Fortescue, did the selling momentum pick up once it hit a record high, or has it been choppy all week?
It's been choppy all week, but you always see our investors taking profits when new highs are reached. So they get an alert generally if they're very interested in the stock whenever it reaches a 52-week high. And we see very aggressive profit taking at that point in time. If it falls away, they'll come back in, or if they think the news is looking still strong, they will come back in and buy it. And that's accounted for the really active trading that we've seen in it.
And Gemma, there was another surprising stock getting a lot of attention this week. Tell us about that one.
Yeah, so this is BBOS. I've talked about it before. I mean, haven't talked about it in literal years because it hasn't been something on anybody's radar, but over the last 2 to 3 months, it's become really popular among our investors right across the market, right? So there have been enormous volume increases into strong bear hedge fund over the ASX 200. So there are a handful of bear funds available for investors who want to take a position on where the market is going. This is investors taking a position on the ASX, and it's a strong bear hedge fund, so they're not just betting it's going down, they want to really profit when that happens. It's a 71% buy at the moment, so it is clearly investors believing at the margin that there's a lot of opportunity here. It's a $100,000 trade size that we're seeing in this. Now there are specific investors who are trading this really actively. It's not right across the base. It's a handful of people who are really committed to it, and they're generally going toward the buys on it. The 71% is pretty high and with large trade sizes, so they think the market's got a way to fall.
Let's talk about the index in general. What can we read into sentiment this week? Who's buying and selling, and which way is sentiment leaning?
Yeah, so it's really interesting to see how people are playing the index. If you looked at our stock trades a year ago or 2 years ago, people do buy ETFs. They're about 4% of turnover, so people do like them. They usually use them as an opportunity to go long, and it's often for investors who are new to the market, and this is my way of taking a position and to get access to the ASX 200. That's what they do. We've seen completely different behavior in this environment where they're trading it in order to take a short-term position and profit. Sometimes it's investors who have a feel for where the market is going and just don't feel they've got the time or the knowledge to be able to pick what's going to perform in this market. Others, it's like, I'm just buying it because I know that there's going to be a rally and I want to be part of it, I don't care. What has been so fascinating about it is because we are seeing the bear funds being traded very actively at the same time as the long funds, you see this real dispersion in where people are going. So as I said, BBOS, that's a 71% buy. The ASX 200, if I'm using Vanguard as an example, that was an 80% buy if we go by the number of trades. If you go by the value of those trades, it's 35%. So what it's telling us is our big trades are selling.
Wow.
And a lot of small investors are buying. It's a really interesting...
Is that a change in what we've seen recently? Has there been, from when the market reached its depths, say a month and a half ago, have we seen the approach towards the index change in recent months? Do people, as you say, want to ride it back up out of the misery and now are cooling off on how much more potential it has, do you think?
I think that's a really good assessment of what's been happening. So a lot of our investors were buying very aggressively, large and small, when the market's down at 4,400. They're thinking, this is extraordinary. I've not been able to access this for 10 years. So they were buying really enthusiastically, and it was largely indiscriminate between the large and the small investors. As the market has come back, our larger investors are taking profits. So they're taking some money off the table in some of these areas. And then we have seen active trading in their bear funds. So clearly a lot of our bigger investors feel that the market has somewhere to fall. Our smaller investors are feeling, look, I want to be in, I want to take advantage of any upside in the market. They're probably also more likely to hang on for the long term because they're not actively trading their portfolios as much. They just want to get in and see where it goes.
Well, it's interesting. Both sides have been vindicated a couple of days each so far this week. I'd love to see where today finishes up, but it looks like the bigger investors are winning out for now. Gemma, thank you so much, and look forward to seeing you again next week.
Pleasure.
Thank you.